If you hold any dollar assets, your savings, your 401k, your brokerage account, even the cash sitting in your checking account, what I'm about to share could decide whether your wealth grows or quietly melts away. A former Russian economic advisor just revealed what he claims is America's hidden plan to wipe out $37 trillion in debt almost overnight. If it's even partly true, it could trigger the largest wealth transfer in US history, one that rewards investors who prepare and punishes anyone who stays asleep. Before we dive deeper, tap that like button and subscribe right now so you never miss what's coming next. Here's the reality. The United States is sitting on over $37 trillion of national debt. That's roughly $280,000 per household. Think about owing 6 times your annual income with no realistic way to pay it back. Even with perfect growth, even with record tax revenue, this mountain can't be repaid the traditional way. Empires throughout history have faced the same problem. Rome debased its currency. Britain lost reserve status and slashed the value of the pound after World War II. No empire has ever fully paid debts this large. America is no different. It just holds a unique advantage as the world's reserve currency. And that's the key. The US dollar is still the backbone of global trade, but even with that privilege, the math doesn't work. You could tax every citizen at 100% and still fall short. You could hope for a miraculous 6% growth rate for decades, and it still wouldn't be enough. So what happens when you can't pay? History shows you inflate. Inflation quietly destroys the real value of debt while lifting the prices of assets like stocks, real estate, and gold. It's a hidden tax that governments love because most people don't understand it until it's too late. Like and subscribe right now to stay ahead of this. The Russian advisor claims the US has a 5-phase plan to escape this trap, and while we can't verify every detail, the outline matches what many economists already suspect. Debt forgiveness? Not happening. A return to a gold standard? Impossible. Modern monetary theory? Pure fantasy. Dollar abandonment? Unlikely, because the dollar is still too important. That leaves one path that quietly benefits Washington: a controlled shift toward a digital dollar and stablecoins. Here's how it could work. Central banks around the world are already testing CBDCs, central bank digital currencies. Executive orders are in place. The infrastructure exists. But Americans would resist if the government tried to flip a switch overnight. So what do you need? A crisis. A cyber attack that shuts down banking for a few days? A sudden liquidity freeze? Something that requires emergency action? Then the solution arrives. Instant digital dollars sent straight to your phone. People accept it because they need access to money. Why does this help the debt? Stablecoins and CBDCs are backed by US government bonds. When people exchange cash for digital dollars, the issuers take those dollars and buy treasuries to earn yield. More stablecoins mean more demand for US debt. That demand pushes interest rates lower, letting the government borrow even more while quietly inflating away what it already owes. Foreign governments are already stepping back from US debt after seeing Russia's reserves frozen. Stablecoins replace them as buyers. It's brilliant from a policy standpoint, but dangerous if you're holding only cash. History gives us the roadmap. In the 1970s, Nixon closed the gold window, inflation surged, and gold prices exploded more than 25% in a single year. Stocks and real estate followed. Debt lost value in real terms. The wealthy who owned assets became wealthier. Salaried workers lost purchasing power. That's exactly what a new round of inflation would do today. Erode the value of the dollar while boosting the price of anything real. If you're asset rich, stocks, real estate, commodities, this kind of inflation can actually make you richer. If you're cash heavy or living paycheck to paycheck, it quietly takes more and more of your spending power each year. That's why the key move is simple. Own more assets. This doesn't mean chasing speculative meme coins or gambling on penny stocks. It means steady, boring, powerful assets that rise with inflation. Broad market index funds like VOO or SPY that track the S&P 500. Quality individual stocks if you know how to manage risk. Real estate in stable markets. Gold and silver as a hedge. Select cryptocurrency exposure if you understand the volatility. Even small regular investments, $50 or $100 a week, compound into real protection over time. What matters most is starting and staying consistent. Remember, the government's priority is self-preservation, not your retirement. Politicians need to get re-elected, and inflation is the quietest way to reduce debt without openly raising taxes. They print more money, lower interest rates, and let inflation do the dirty work. Your salary lags behind, your groceries cost more, but your stocks, property, and gold climb higher. If you own them, you win. If you don't, you lose. Japan offers a real-world preview. Decades of near-zero rates and constant money printing left everyday workers stuck with 1970s-level wages while asset owners built massive fortunes. The gap is permanent. That's the future the US could be heading toward. And it's not some far-off possibility. Central banks are already buying gold at the fastest pace in 50 years. Major nations are settling trade outside the dollar. Stablecoin adoption is exploding. All of this points to one outcome: a long period of controlled inflation that reduces the real burden of America's $37 trillion debt while rewarding anyone who owns appreciating assets. Like and subscribe right now so you never miss the updates and strategies I share as this unfolds. Here's the simple checklist to start protecting yourself. Invest regularly in broad assets. Low-cost ETFs are an easy entry. Hold some real assets. Gold, silver, and productive real estate are time-tested hedges. Learn to sell intelligently. Cutting losers early and letting winners run is the rule Wall Street follows, but most retail investors ignore. Diversify globally. Don't keep every dollar in one country or one currency. None of this requires timing the market or predicting exact dates. The goal is gradual movement toward ownership, more assets, less dependence on a paycheck. Governments will always protect themselves first. Your defense is to protect yourself with assets that rise when money loses value. Whether this Russian advisor's 5-phase plan is perfectly accurate doesn't even matter. The math guarantees that some form of financial reset is coming. Inflation is the path of least resistance, and a digital dollar makes it easier than ever for Washington to pull the trigger. Stay alert, keep investing, and don't wait for a headline crisis to start. Tap that like button, subscribe, and share this video with someone you care about. The more people who understand what's happening, the better chance we all have to stay ahead of the biggest wealth transfer in American history.